first chat is going to be on technology and innovation in gold. The session would be chaired by Mr. Martin Huxley. The speakers would be Mr. Rich Theo, co-founder Paxos Trust Company LLC, and Mr. Gregor Gregersen. May I request the chair and the two speakers to come on stage. As they walk in, a round of applause for our chair, Mr. Martin Huxley, and the speakers. Before I hand over the session to Mr. Martin Huxley, and a brief introduction about each of the speakers. Starting with Mr. Martin, he is the Executive Director, Global Bullion Solutions. Mr. Martin Huxley was appointed as SBMA Honorary Advisor in February 2023. This coincided with his relocation to the UK, where he has since established his own company, Global Bullion Solutions Limited. Prior thereto, Martin was the global head of StoneX Group, precious metals business based in Singapore, leading the team operating out of 7 countries. Martin concurrently served as chairman SBMA from 2017 to 2021 and vice chairman thereafter until his departure. Before StoneX, Mr. Martin spent 14 years with Standard Bank, dedicated to the natural resources sector. After moving to Hong Kong in 2004, he assumed a number of roles in the Asian region, including head of credit, leading bank's structured commodity solutions, and head of structured finance division. Rich Theo is a co-founder, Paxos Trust Company Limited, LLC. Rich Theo co-founded Paxos in the year 2012. Previously served as CEO Asia and currently serves on various boards of Paxos. Paxos is an institutionally focused crypto service provider that counts PayPal, Bank of America, MasterCard, Binance as their client. Mr. Gregersen, founder Silver Bullion, established Silver Bullion in 2009 and is a specialized wealth protection company which procures, authenticates, stores, and buys back precious metals for the purposes of long-term systematic wealth protection in Singapore. Silver Bullion's subsidiary is the Safe House Vault, which is a bonded vault and 180,000 square feet vaulting facility, the Reserve. Many of you have registered for a field visit to Reserve in the afternoon. With this introduction, may I request Mr. Martin Huxley to take over from here on. Thank you.
Thank you. Thank you, Vatsa. Good morning, everybody. Welcome, Rich and Gregor. The subject of technology in gold is quite broad, whether it be exploring, mining, processing, traceability, marketing, etc. But for the purposes of this chat, we're going to concentrate on investing and trading of physical gold. Obviously, the intros have just been done, so maybe I can start off with Gregor and ask you to give an overview of technology enhancements and challenges that you've seen over maybe the last 12, 24 months.
Yes, hello. So even though we started Silver Bullion, I'm actually a software developer myself. And you know, as a team here is about technology with gold, I think there are four broad categories where I see such as technological advance. One of it is the tracking of gold bars from the origin. There are companies like Excentrias and so on, which have done a lot of work on that side. We saw earlier the LBMA announcing Excentrias being the official tracking for bars. Now keep in mind that these systems track one bar going through its lifetime to different locations. There's another type of tracking, which is called POR tracking, proof of reserve. And this tracking is what a vault will use to prove that all of the bars that we are claiming to be there are actually there. And that's one of the technologies that we specialize in. So tracking of bars and POR systems kind of go well together. And then we have technologies like collateralization of gold. So if you're storing some gold somewhere, how can you make it possible for somebody to borrow money from somebody else in a secured way? With all the checks and balances behind it. And then lastly, we have tokenization. And I think tokenization is what most people really like to talk about when it comes to gold technology nowadays. But tokenization really, oftentimes it means something different to different people. And I'm very glad we have Rich here from Paxos, because Paxos is the biggest publicly traded gold token out there. We ourselves, we had a gold token called Cash, which was a separate company we did. We spent 5 years with it. We learned a lot of lessons along the way as well. And I think those will be some of the things that we can explore now. Yeah.
Thanks, Gregor. I was going to introduce Rich as Paxos representing the largest digital asset backed by gold, but you've already done that. But maybe I can pose the same question to you about giving some of background and what you've seen in recent times in the development of Pax Gold.
Sure. So thanks for having me, Martin. It's Paxos basically is a blockchain and crypto infrastructure provider. And we've done that for a series of asset classes around the world, cash being the largest one. We've also done that with securities, and we also provide trading services for large fintech companies around the world. We started Pax Gold actually quite a few years ago, probably back at least maybe 2017, 18, it's tokenized gold, essentially, exactly what Gregor said. We focus purely on the tokenization part, which on the surface sounds really simple. You take gold and you represent that gold on the blockchain. The challenges we face with that is, number one, the legal implications of doing something like that and giving the right of ownership for that gold to ensure that it is actually always redeemable by the holder of that token. So that legal process was very, very challenging. The second thing was, how do you combine owning bits of gold everywhere? So when you fractionalize gold and you trade it around the world, how do you actually put that into a single bullion that can be easily redeemed? And in our case, they will be redeemed at Brinks in London, but regulated by the NYDFS in New York. So we had that challenge as well with tokenization. And of course, tokenization of gold, unlike tokenization of other assets, there is no interest rate from holding gold. So it was significantly less profitable than holding cash. So, it's an interesting product. We've had it for a while, and we've been thinking of ways to innovate on it and see how it can be improved since it was launched quite a few years ago.
Thanks, Rich. I was going to ask, I think you mentioned to me that the Pax dollar has $25 billion in circulation. Was it something like that?
So the dollar products that we have, we've done a couple for ourselves. We've done it for large institutions, including PayPal. The one that reached the largest was BUSD, which was done for Binance, which peaked at around 24 billion.
Okay, and I looked on the Pax Gold, and I think probably something like $400 million under the Pax Gold. I'm just interested in your views on investor sentiment and behaviours towards those two different tokens, and obviously this one being much more successful. Is it a case of there's just much greater interest in that, or are there noticeable drawbacks in the gold that hinders its marketing?
So there are quite a few reasons why one's much bigger than the other. In crypto markets, at least, dollar tokens are the base currency. And we had really hoped that over time, gold could be a more interesting base currency for people who believe in cryptocurrencies, who want to hold inflation hedges, that trading and owning things and have them being denominated in gold would be very, very interesting. However, there are quite a few drawbacks from actually having gold as the base currency. There is the issue of liquidity, and that's something that's pretty hard to build up versus dollar assets. Gold doesn't trade 24/7. unfortunately, crypto trades 24/7, so there are large pockets of time where there's some sort of dislocation between gold markets and the crypto markets, and I guess there's no easy, convenient way to fix that. And also, I think there's generally at least as of right now, where the products are being issued, marketed, and accessed by people, there's a product market fit issue where people who are in the crypto markets aren't in it to have a good, stable inflation hedge. They're in it to make a lot of money. And so, we had hoped that there will be institutional take-up to improve clearing and settlement times, right? Because it's tokenized gold is essentially, DVP, instantaneous settlements, but that hasn't picked up in the institutional side as well, because most institutions don't want to hold their assets on the blockchain. So, that created a bit of a product market fit issue that till today has not been fully solved.
Thanks, Rich. Question for both of you regarding regulation. How does regulation drive or impact the drive for innovation, both in terms of how it may assist innovation and also maybe some of the challenges that it could present as well? Maybe Gregor, you kick off first.
Yeah, if you're trying to do a publicly traded token, so if you're talking about blockchain, the real value of a blockchain in many ways is the fact that you can have distributed parties trading among each other without knowing each other. And if you don't allow that because you're implementing what's called a travel rule. So if you're familiar with MIS regulations, financial regulators usually want to know who's transferring funds to who. And I want to know the IDs, the address of the person, where does he live, blah, 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 and how much is going where. And that information is called travel rule. I need to know the funds going from here to here. Who is that? Well, if you take blockchain like Ethereum or Bitcoin, that information normally isn't there. You can make a new account by coming up with a password and you create a new account. And then you're transferring things more or less anonymously. So if you have a regulator who's going to say, we want a strict travel rule implementation, that is not compatible with the way blockchains work. And so if you're making a gold token and you're sending it out there and you're backing it with gold, and if over time the regulator says, I'm getting a bit worried here. What if some of these gold tokens go to Iran or somewhere else? How can you make sure it doesn't? Well, you can't. And so if the regulator comes and says, well, I'm not really comfortable with this anymore, then you have a lot of regulatory risk, essentially. So I think that's one of the huge sort of issues when you create any kind of tokens, that the regulators might be supporting it or might not be supporting it, and it depends a little bit on where the regulatory winds are going, and it depends on which currency, which jurisdiction you're under. So I would say that's one of the biggest issues when you come to tokenization of gold. You have a lot of, you're quite unsure, what tomorrow is going to bring, and that makes it hard to really invest a lot into these sort of systems.
Yeah, so I think, from my perspective, whether regulation is good or bad, I think that lack of regulation is probably the worst thing that happened to innovation in blockchain, whether it be tokenization or almost anything else. I think lack of innovation has been really, really bad. For us, we were the first to get licensed at the NYDFS in New York. We've got licenses all over the world. Here in Singapore, we're one of the early ones to get an MPI for digital payment tokens. Last year at the Singapore FinTech Festival, the former MDA at the MES announced that we've basically met compliance for single currency stablecoin, and we'll be getting the first, I guess, pre-approval in a way for stablecoin issuance out of Singapore. And we're seeing regulators in Hong Kong, in the Middle East, and many other parts of the world embrace technology in many different ways. And I think if that trend were to continue, that's basically going to encourage traditional industries to actually embrace and, well, maybe not embrace, but at least, have teams that try to understand how they can use this and how these things can improve their businesses and improve their efficiencies. I kind of think of gold tokens almost as single currency stablecoins, in the sense that a single currency stablecoin is quite simple. You hold $1 in reserve in a bankruptcy remote entity, you hold it in trust, and the regulator ensures that your $1 exists. And then you issue $1 worth of token. And I think that basic principle of tokenization and how you want to regulate it and ensure that that is in place is quite easy to replicate for a lot of assets that kind of just sit there. And so I'm hoping that as countries embrace stablecoin regulation, they will embrace tokenization regulation for quite a wide range of assets. I think, like Gregor mentioned, the travel rule has always been an issue for crypto. Singapore is one of the first, or at least the only one I'm aware of that is really pushing for a full compliance on travel rule, which has been met with significant challenges. But there's new technologies coming up that is making it slightly easier, although on principle it's quite hard, but easier to implement and enforce travel rule. And I think that new technology will come up to meet new requirements, and new regulators will come up with rules that would encourage adoption of new technologies in industries like gold and many others.
Thank you. So I remember last year one of your colleagues in Paxos saying that regulation was needed to provide trust and integrity. And if we're going to say that the success of tokenization is dependent on regulation, the global gold market has so many players, so many exchanges, and we can see so many companies that have tried to develop their own products that have been, underpinned by varying forms of gold. How does the industry as a whole embrace all of those regulators, or is it a case of you just got to pursue individually? Because I can't see that succeeding, and I think, and maybe there's not an answer to this, but how do we bring everyone together, and who ultimately are the regulators that you have to approach?
So that's an interesting question, because I think that most countries that we're looking at and talking about that embrace gold today are generally countries that one very important criteria have a single national regulator. And when I say that, I mean in Singapore it's MAS, in Hong Kong, well, Hong Kong technically too, but generally one main one. And having a singular voice in what it is matters a lot. So the reason why I say that is because gold is very unique in the sense that maybe most people in this room know this, but most people outside the gold industry don't know this, but gold is not specifically under the purview of any single US regulatory agency. So when you see people in the US, when the SEC says everything's security, and the CFTC says everything's a commodity and everything's a currency or things along those lines, gold actually does not fall into any one of those categories. So that essentially means that gold is not specifically regulated by a single US agency. So that clears one large hurdle for global adoption. And I think that if the process of how you should regulate gold, if you were to have tokenized gold moved around the world, comes more down to industry than it comes down to regulation. Because I think regulation will ultimately stand that we want to make sure that how much gold you say you have, you actually have, and that's the core of it. Whereas it's up to industry to come down to say, what is the standard of gold that we want moved easily around the world? What are these standards? You know, what are the requirements? And these, I think, are more, you know, guys in this room should be deciding, and not guys tokenizing or regulators.
You know, for us, when we built Cash Gold, our idea was that you can have this gold in Singapore, you can have some in Zurich, you can in Frankfurt. We had it set up in Dallas. We had a system whereby the vault operator in these vaults would track, photograph the bullion, do a test of the bullion. It will be there. Once you have the tokens, you can deposit gold in, say, Singapore. You can take delivery of it in Zurich and somewhere else. The problems that we faced, you know, there was a lot of infrastructure, there was a lot of logistics, there was a lot of technology and work and so on. We pretty much covered all of this and built it up. But then we realized people aren't really willing to pay for it, because especially when you go to the crypto world, people are used to dealing with, let's say, ethereal things. US dollar as well, right? These are balances. You can transfer these. There's no physical behind it. But as soon as you have physical, you have storage costs. You have processing. You have logistics. You have costs. And the other factor is, if you're holding US dollars, and let's say you're holding in a bank, US dollars are a depreciating asset. It's called inflation. And you're getting an interest. Well, you can keep the interest, which is a good way of monetizing all of this. And so that's how you get paid. But if you're storing gold, gold is an appreciating asset which doesn't pay interest. So,
I'm going to interject just on there, because obviously you talk about, you know, logistics costs, non-interest bearing, talk about storage costs, but we see here a very, you know, the physical markets are somewhat inefficient. You know, it's very manual, it's a lot of picking up the phone, it's a lot of, you know, to it, but people still pay storage costs, transportation costs. So what's the hindrance when it's, or is there additional costs that are incurred in terms of digitized gold?
Well, what we found is that if you're tokenizing gold and you're putting it out in the wider crypto world, people don't appreciate what gold is. They're looking at the US dollar and they're looking at a gold token, and they're saying it's kind of the same thing. Actually, the gold token is kind of annoying because it's an ounce of gold. I'm not used to thinking in an ounce of gold. I'm not used to thinking in a gram of gold. I'm used to thinking in US dollar terms. So most people would want to have a US dollar backed stable coin. And so they're not willing to pay a premium for having a gold token which has physical behind it, which is going to appreciate. A few people might, but most people don't. And so it's very hard to monetize a gold token, because as soon as you take a storage fee and one person transfers a gold token from one person to another, and the other person receives 0.997 gold tokens, they're saying, hey, I got cheated. Where's my 0.003 token? Why is that gone now? And that's a very quick way of sort of losing interest from the crypto community. So you have a lot of uncertainty when it comes to regulatory side of things. At the same time, it's very difficult to monetize such a token. At least that has been our experience.
We have similar issues trying to monetize, and we have the same issue like what you just said, where you send someone 1 ounce and they get 0.997, and that's unpleasant in general. That also technologically makes it hard for it to be integrated into wallets and accounting systems. But I would say that one thing that I want to add to what you said was that, you know, when people trade in it, do they want to trade in gold versus, you know, holding in cash? I think that because of the higher interest rate environment we're in, I guess we're not that high from a historical perspective, but in our relatively high interest rate environment, people are more and more willing to hold something that is interest yielding and then trading that into dollars and then trading dollars into assets. So psychologically, when we were in a zero interest rate environment, no one cared about that. I either had dollars or I had assets. Now people think I have something that is interest yielding, then I get them into dollars, then I get them into assets. And I think having that extra step is easier to convince people, like, hey, instead of just, you know, short-dated U.S. Treasuries, why don't you also hold gold? Right. So right now, what we're seeing is a huge trend in crypto is essentially tokenized U.S. Treasuries, and people can hold them, yield 5.25, and when they want, they'll quickly swap that to cash and then swap that to assets. So I think that will be an easier pill to swallow for people who are doing that.
Thank you. I've got a couple of other points, but we'll just ask one of these questions that's been posed by the audience, and maybe, Rich, you're the better person to ask that one, which is the US warehouse receipt provides legal lien for a bailiff to secure attachment of a portion of an undivided asset. Have you achieved exactly that through London redemption should there be a risk event with a tokenized gold?
Yeah, so thanks for that question. So the way that that is handled is that from anywhere, from any exchange where Pax Gold is available, you can purchase Pax Gold, and then you would have to transfer them to the same crypto wallet. So the same Ethereum-based wallet. As long as it's in the same wallet, we would recognize the owner of that gold, regardless of where they purchased it, as the same owner. And then from there, on a, I believe, daily or even more frequently, but let's just call it daily, on a daily basis, we'll reassign, so all our gold is allocated gold. So we'll reassign every single person's allotment of gold down to the specific bar based on what is held in that particular wallet. So if you only started with an ounce and you bought enough to have a bar, you know, you could go online and you can find the exact bar that you own in Brinks, and you can go and pick it up. And you know, or if you don't want to, you can send fractions of it to people as well. And then they would basically own half a bar, and you know which bar it is, and it's allocated to you specifically.
Wonderful. Thanks for the clarity. And just one question regarding the gold. In the case of Paxos, that was all sitting with Brinks in the UK. Do investors, are they happy with it being sitting in the UK, or do you have people that want to see it? And, you know, Gregor obviously markets himself on gold being in Singapore. Do you see investors that would prefer the option to look at multiple, you know, to pick one of these 4 countries would be a better offering?
My short answer is yes. I think that other countries would be interesting / better offering, but I think Gregor's probably a better place to go into specifics.
Well, so our tokenization offers, there was a separate company, it's called Cash. Our main business is silver bullion, and you know, as mentioned, we believe Singapore is probably the best location, and I might be biased here, for storage of gold. Switzerland is another location where a lot of people store. I think nowadays people are increasingly worried about a potential US dollar crisis down the line. And so keeping a little bit of gold in different jurisdictions, you know, just seems like a prudent thing to do.
Thanks, Gregor. I know we're near time. I'm going to run it over a couple of minutes, as I want to take advantage of the forum we're in and the audience that we've got. You know, we've had a lot of people talking about, you know, digitization, the World Gold Council with their 247 project. I just wondered, are there any particular initiatives that are not currently being taken that you think, you know, maybe the LBMA, the World Gold Council, and/or exchanges, authorities around the world should be pursuing? Are there any quick wins or priorities or things that you think, you know, where bringing those bodies together should be the key focus or the top priority?
In terms of tokenization?
I'm just trying to, you know, because I think at the moment we all talk about this, but it's a big project. There's a lot of participants in there, and I just wondered whether you think there is a specific area that is of higher priority than others.
Well, I think for practical things, we talked about it before. it's my understanding that the LBMA London traded bars and things being traded on COMEX, for example, they aren't really quite compatible. One system is looking for LBMA bars, one system is looking for, say, kilo bars and so on. So if these exchanges will be able to accept each other's standards, then it will make gold more fungible in some ways, right, from a very practical point of view. So that will be one sort of area which will be good to improve. I think that traceability is a really good area to work on because nobody has an issue with traceability. So POR system, things like what Exandras is doing, once you have systems you can trust when it comes to traceability, you're opening up a whole world of opportunities and what to do with it. So I think oftentimes these are the foundations for something you do later. So I very much welcome, you know, the LBMA's efforts in that direction.
Thanks. And I think, you know, we heard yesterday that from David Tate, you know, on that traceability, that the 32 gold mining companies or members of the World Gold Council are adopting the Exandras platform, I think, and obviously there's going to be progress made with the London Good Delivery, some pressures put on there. I think we'll just quickly take this question as it's been put forward by the audience. Where's the opportunity for tokenized precious metal in Asia? Do you foresee institutional adoption, or will they stick to paper gold? Over to you, Rich.
Sure. So I'll take the second part of the question first. I do see institutional adoption. Previously, there was interest in that from a clearing and settlement standpoint. There was interest in being able to move gold, you know, essentially 24/7, or at least experiments around that. Where that did not pan out was in two areas. One was that they weren't comfortable holding gold in tokenized form, and the second was even if they weren't comfortable lending against tokenized gold. So they were not, you know, they could not be used as collateral. So I do see that as regulation comes in and tokenized gold, essentially allocated tokenized gold, is seen as something as good as allocated gold, that could change. And I do think that the willingness to actually have that used as collateral makes a huge difference. The first question, I do see a very large opportunity for tokenized precious metals in Asia. I think that it's easier for a, I guess, smaller region to come to better standards. It's easier for them to be more fungible, and it's also easier to actually bring in retail into this and actually have that whole cycle work from miner to jeweler. And I think that there is desire for that cycle in terms of financing to be significantly more efficient. So everywhere from Malaysia to India is basically interesting to have that be on single standards, single payments, and instantaneous swapping of gold around.
I think you make really important points when you talk about collateralization, financing, and instantaneous settlement. I mean, that's another debate, you know, with gold prices at $2,400 and common consensus they're going to go a lot higher. It's going to put a lot of pressure on settlement and risk limits, etc., etc. So this, you know, it's not going away. Sorry, I interrupted, Gregor.
Yeah, for us, you know, if we talk about collateralization, what it always comes down to is that you might not be able to trust the gold is there, or you might not be able to trust the gold is real, or you might have some other concern on why you're not collateralizing. So we are in a small sort of ecosystem. We've been running a peer-to-peer collateralization option for our clients for about 8 years now. It has grown to about $300 million a year now in loans, so close to $1 million a day. We've done about 17,000 loans. The system works very well, but the reason it works is we provide a lot of transparency. So we provide photos of the bullion, We test the Bullion, we guarantee the Bullion. If there's anything wrong with the Bullion, we come up with our own money on it. So that's how we are doing it, and it works. The problem becomes when you have a lot of counterparties in between and you don't know who's going to pay for it if something's wrong and there are too many parties to have clarity. I think that's when things get murky, and then when the risk perception becomes high, and that's when things break down. So if we can have great clarity and assurance on things, I think a lot of these things become possible.
Thanks, Gregor. Vassa's looking at me, but I'm going to just have one, before we wrap up, one very quick, 30 seconds or 1 minute each. Singapore specific. Rich, you weren't here yesterday, but Shao Kai of the World Gold Council spoke of SBMA Forward 2030 and positioning Singapore as a major global trading centre. I just wonder, are there any specific initiatives that you think should be top priority when, in his words, racing for the checkered flag? And he was doing an analogy to Formula One and Singapore hosting it soon, and obviously, how do we get to the checkered flag?
So I think, in my perspective, Singapore has taken a interesting view on crypto and blockchain regulation. The view is that speculation is extremely bad, and that will be clamped down. Exchanges, trading, and staking, and all the kind of stuff that you guys read about that ends up in disaster. Those things are all bad. However, embracing infrastructure that creates the ability for assets to move extremely quickly and efficiently around the world is extremely important. I think from a regulatory perspective, the stance is that if you're trying to create a speculative trading company of crypto assets, the answer is no. If you're trying to build better infrastructure that makes businesses run more efficiently, the answer is yes. And I think as that comes into place and more licenses are given out for people to essentially tokenize precious metals, I think whoever wins that race will also win trading of such precious metals over the next 20, 30 years.
Thank you. Great answer.
I think for us, we have stopped with the cash experiment, which was a side company, and we are now fully focusing on the infrastructure and physical infrastructure. So later today, if you have time, please come visit our vault, 180,000 square foot down in Changi. This facility and our POR systems, the asset tracking systems and so on, they're really meant to provide the infrastructure for tracking of these physical assets, which can then be used by other companies, including Paxos, for example, to provide the tokenization and to provide the ability for people to trade. I think overall we decided as a company to take a step back from this because we just have too much regulatory sort of risks in doing it. And I think it makes more sense for us to specialize in selling the shovels to other people who's then going to go out and find the gold out there. So that's essentially what our approach has become now.
Okay, we're going to wrap it up there. Apologies, we've gone a little bit over, and I'm getting a few evil eyes. So
thank you.
But I'd like to just say it's been a really fascinating chat, and a big thank you to Rich and Gregor, who obviously are hugely knowledgeable in this field.
Indeed, a round of applause for the chair also, Mr. Martin Huxley, because technology session is one of the highlights of APPMC.